and McConnell will continue to be Senate Minority Leader instead of Majority Leader because of those losses. The Senate, meantime, wants to end the federal COVID-19 emergency declaration that's given the White House special powers. At the same time, the White House is asking for more COVID funding and aid for Ukraine at the same time. We get more on what's happening from Bloomberg's Amy Morris.
Senate Republicans voted to end the emergency declaration as the Biden administration is asking for another $10 billion in COVID and other infectious disease funds. White House officials are also pushing for nearly $38 billion in aid for Ukraine, an easier sell for Senate Republicans. Senate Minority Leader Mitch McConnell has said it's important to continue helping Ukraine. As for COVID funds, Senate Appropriations Vice Chair Richard Shelby says he doesn't see the need. In Washington, I'm Amy Morris, Bloomberg Radio.
All right, thank you, Amy. And comedian Jay Leno has had surgery for what doctors are calling deep second-degree burns, possibly third-degree burns to his face, hands, and chest. And Dr. Peter Grossman at the Grossman Burn Center at West Hills Hospital in Los Angeles.
He has undergone one surgery so far. He did well with that surgery. He is in good spirits today.
In good spirits in spite of being burned after gasoline ignited on a vintage steam car Leno was working on over the weekend. Dr. Grossman says Leno faces another surgery this week. He anticipates a full recovery, but there could be some remnants from the injury. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Denise Pellegrini.
All right, Denise, thank you so much. Carol Master along with Tim Stanovic live here at Bloomberg headquarters in New York City. And we're going to talk a little bit about the cover story of Bloomberg Businessweek magazine. It is about the story that has captivated us in the crypto world for the last week and a half or so.
Yeah, we're talking about the demise of FTX. I want to start with the contagion that we're seeing, Carol. We're seeing that the contagion from the fallout of FTX is starting to hit more and more companies right now. This morning, we saw the Winklevoss twins, their company, which is Gemini, thank you. Yeah. Their company came out and said that it's being hit by it because they announced that its yield product for retail investors will also halt redemptions. This is related to Genesis. It's a key partner in their program. And Genesis is suspending redemption. So it's kind of like, the word contagion, literally the definition.
No, it's a really good point. And this is what we're trying to, as each day goes by, as more is known and as more investigations, I guess, continue into it, finding what is the contagion impact and just kind of understanding how the world was connected ultimately.
Well, one thing I want to keep pointing out is the contagion seems limited right now to crypto. And I think that's really, really important.
Not a lot of cross-asset contagion.
No, and I think that's by design.
None, I guess.
To a certain extent, you had private firms investing in a lot of these companies, and you have them investing in a lot of these companies. But Carol, you didn't see, traditional banks getting into it the way that, these singularly focused firms did.
Right, exactly. What's interesting,
it's like crypto-focused hedge funds, crypto-focused companies.
Right, exactly. And, as our reporting, has put out there, that at stake is whether a crisis of confidence ultimately topples what's become a lucrative business of borrowing, lending, and leveraging crypto and causes some kind of industry-wide retrenchment. It's not just about, buying various crypto. It's about how it's been kind of lent out, leveraged up, become kind of more like established financial.
It's what companies have done with customer deposits.
Exactly. And that's what we're going to talk a little bit more about. What is this story and how it relates to the cover story this week.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks are declining as a Fed pivot seems less likely. Right now, we've got the S&P down 29, drop there of 0.8%. The catalyst this morning's retail sales numbers coming in better than expected. We had the Dow down 13 points. It has been fluctuating between gains and losses, down now by less than 0.1%. The Nasdaq Composite Index underperforming, down now by 1.4%. Nasdaq 100 Index down now by 1.3%. The 10-year yield 3.69%, with the 2-year yielding 4.36%. Spot gold down 0.3. Bitcoin right now down 2.2%, 16,520 on Bitcoin. Crude West Texas Intermediate down 1.4%, 85.67 a barrel on WTI. So a down day now for the Dow, the S&P, and Nasdaq. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. There is a lot going on in our world, and especially when it comes to crypto. And you were just drawing my attention, Tim, to the latest story when it comes to Sam Bankman-Fried, of course, the former FTX CEO, saying he was mistaken about the cryptocurrencies exchange's leverage levels, thinking it was about $5 billion when it was $13 billion. And he's putting this out in a series of tweets.
Yeah, 23 tweets. He said $13 billion in leverage, total run on the bank, total collapse in asset value all at once, which is why you don't want leverage.
All right, so let's get into it because
those are his words.
Yeah, those are his words. Good point. The cover story of the new issue of Bloomberg Business Week, which is out on newsstands tomorrow, already on the Bloomberg and at Bloomberg.com, looks into FTX, its undoing, how it delivered a lot of shocks, but perhaps most of all the shock of what we didn't know, which is kind of interesting to hear what SBF maybe didn't know either about leverage at his own firm. Let's get to it. Bloomberg News crypto reporter Olga Karif has been following this. Her reporting on FTX and crypto has been a must-read. She joins us via Zoom from Portland, Oregon. Olga, good to have you here with Tim and myself. So tell us about your story and what you looked into.
Thank you. It's great to be here. So essentially, we looked at sort of what happened, what are the ramifications for the crypto industry. And this has been, of course, a huge shock for everybody who's been in the crypto community for a long time, and as well as newer investors who came in the last couple of years. You know, it's a complete shock because Sam Bankman-Fried, or SBF as he was known, he was sort of considered to be one of the most sort of trustworthy, if you will, people in crypto. He was testifying in Congress. He was meeting with regulators. He had a lot of respect and a lot of weight in this industry. And all of a sudden, his company has come undone.
Yeah, a lot of respect and a lot of influence. Magazine covers, as even he alluded to. He said he became overconfident as a result of that. Hey, Olga, one thing that I'm having a really hard time reconciling is, the prominent backers of the company and the really sloppy leaked balance sheet that we saw. I mean, how does a company this big have such a lack of understanding of what it has on the balance sheet? And we're seeing that play out in real time with Sam Bankman-Fried's tweets. Like, he's saying these are all rough. And he said he didn't know how much leverage he had.
Yeah, it's incredibly surprising. And I think what this means is that there wasn't enough oversight. There wasn't enough due diligence that you need for a company this size with such caliber of investors. Typically, for a company this size, you would have a board and you would have all kinds of auditing going on and committees and, plenty of people will be looking through what's going on. And what we find is that for FTX, a lot of it has been just, Sam Bankman-Fried overseeing the entire operation.
It's interesting, you note too some of the other tweets that Sam Bankman-Fried has done and talked about how he messed up, different words that he used, and blaming poor internal labeling of accounts. this is not someone who doesn't understand, right, how the sophisticated financial system works. If you look about his past experience, right, this is someone who should have known, or do we give him some room for not having better systems in place? How are we supposed to look at this?
So on the one hand, he is only 30 years old. So, but on the other hand, during this 30 years, he has managed to do a lot. He was a trader at Jane Street, of course, the very highly respected quantitative trading firm, which gave him Wall Street cred. And then he also ran Alameda since 2017. Alameda Research was his trading firm. Initially, Alameda essentially made money off of price differences on different crypto exchanges and made quite a lot of money that way. And then he branched out into actually running a crypto exchange in 2019. And so he had a lot of experience, I would think, with financial matters. So even though he's quite young, but he has had a few years when he should have learned how to run things properly.
So what repercussions could he face? He does keep tweeting over and over again that his number one priority is making it right with customers. We'll see if he's able to do that. But what consequences could he face?
So in terms of his tweets, they're getting a huge backlash online because people don't trust. They're getting a huge backlash online because people don't trust him anymore, and essentially just almost wish that he didn't even say anything, because instead of this empty promises. In terms of what could happen to him, it's still unclear. FTX is still in the process of filing. It's a bankruptcy, all of its requisite sort of initial bankruptcy documents. I'm sure there will be an analysis of what exactly went wrong and who's to blame. Nobody has been charged with anything yet. So I think it's going to be a pretty long and drawn out process. We'll have to see how it plays out. But a lot of people are kind of convinced that somebody could face charges for this.
Well, Olga, it almost feels like an uber case of FOMO, right? As soon as he got momentum and, media coverage, created some of that momentum. You had certain venture capitalists or Silicon Valley investors getting in. I'm sure friends were talking about, like, hey, what are you guys onto? Like, it's just, you think about how the momentum and velocity that was created by SBF. I'm not, behind him for a lot of different reasons, and big name investors wanting to get in because, some other big name investors were in, and not giving him a pass. But you realize this can happen, when there are frenetic investments that are out there.
Absolutely. I think we sort of until this year, we were in this raging crypto bull market where, prices were going up like crazy. Everybody, all of the venture capitalists wanted to find the next unicorn in crypto. When they saw, this very respected investors like Sequoia, backing FTX, perhaps some of them haven't done as much due diligence, it sounds like, as they should have, just to check things out. There are sort of standard processes for due diligence in any industry, but I think some of them may have been forgotten in the rush to get in.
Yes or no, Olga? We have 10 seconds. Is this the end of crypto as we know it?
I don't think so. I think it's going to come out of it, but it's going to be a long lull while investors lick their wounds and sort of crypto prices start moving up again, and everybody becomes interested in crypto again.
Those wounds are deep. Olga Kharif of Bloomberg News. This is the cover story of the magazine.
close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go in the trading session. Romaine Bostic here alongside Taylor Riggs. We're joined right now by our colleagues Carol Master and Tim Senovic. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube and Quick Take. Another weekday here for equities. An interesting day, of course, going on in the fixed income space. And sentiment right now, Carol, I think right now it appears to be under stress.
Yeah, absolutely. And you can see it in the trade today. I call it like a bad EKG in terms of the trade because we're kind of all over the place, certainly on the equity side of things. We've got a lot of Fed commentary. We'll get to that in a moment. Really some underperformance that's also weighing on the overall market trade is what we're seeing in semiconductors today. We're going to bring it up for our TV audience, but the SOX is down almost 4% as we speak here. Almost every name, that's about 29 members out of 30, are down in the SOX, and it has to do with Micron coming out and warning of weakening market outlook. So specifically, you've got Micron down about 7%. NVIDIA, which reports after the close today, it is down about 3.5%. And you've also got Advanced Micro Devices, that name, Tim, almost down 5%. So really some pressure there on that trade.
Also seeing some underperformance when it comes to retail, just getting beat up today. The S&P 500 retail, or should say S&P retail ETF, down 3.5%. Right now being dragged down by a handful of names that are down double digits, including Target, Carvana, Big Lots, Wayfair, Advanced Auto Parts. Also, though, coming as we saw stronger than expected retail sales, saying that consumers are holding up despite inflation, and could lead to a, what are we calling it, a step, not a step down as quickly? I'm not going to say the P word here, but not a step down as quickly.
Downshift.
Downshift. Okay, thank you, Taylor.
All right, as far as the broader markets here, of course, a couple of days ago, we were talking about a major indices looking like they were going to set the test of that 200-day moving average. A pullback today with the S&P back below 4,000, down about 0.6%. The NASDAQ composite down more than 1%. The Russell down about 1.7%. The one bright spot here on the day, but not much of a bright spot, the Dow Jones Industrial Average up, but only by about 0.1%.
So much of a similar theme underneath the surface within the S&P 500. So defensive when you think about utilities, staples, and healthcare, pretty much the only sectors in the green. How much of that is this defensiveness and the rate story as well? The sectors benefiting when rates are falling. Down to the bottom, this is the story that tells us all. It's technology, discretionary, and energy. Those are the big losers on the day, off about 1% to 2%.
Yeah, Target shares right now down about 13% here, having its worst day since May, and it raises the whole question here about sort of the disparity that we're starting to see in that retail space. Target a loser, but Lowe's a winner. Lowe's shares up about 3.5% here on the day after that company said, hey, everything's fine. People are still spending, and more importantly, they felt comfortable enough in their guidance. You are seeing, though, a rotation back into some of the defensive areas. United Health and a lot of the healthcare companies getting bid higher on the day. United Health up about 2%. You mentioned it just a second ago, Carol. Micron shares down about 7%. NVIDIA earnings coming after the bell, and we're still seeing a lot of disruptions going on in the crypto space. Coinbase down 12%
Romaine,
on the day.
Didn't you think Lowe's was interesting? Because Lowe's is really playing into the individual homeowner, which just, despite some of the weakness we've seen in homes, it looks like individuals are still out there doing things for their homes.
Yeah, and that's exactly what they said on the conference call, that people still have the capacity and, more importantly, the willingness to spend on those DIY projects, if you will. And I think, at least for now, they seem confident that that can carry them through whatever recession or economic downturn we might be in.
Let's think about, Carol, what else is carrying us through or not. And in this case, as always this week and in the last few trading sessions, it has come down to massive dollar weakness. Now, on the day, we know that the Bloomberg dollar is maybe unchanged. We'll call that unch as maybe one of my favorite words. But take a look at some of the technicals, Carol. That 200-day moving average has provided some decent support, but you've blown through all of those other technicals in just a matter of a few sessions.
Did you hear that when you said the word unch? That was the sound of Tom Keene falling out of his Barca lounger, dropping the martini, and reaching for his phone.
I'm going to copyright it. Unch, an unch.
Tom, I had nothing to do with that statement. I'm just going to say. All right, speaking of statements, we've heard a lot from many of the Fed speakers, some key voices when it comes to monetary policy. You know, guys, we know what the mandate is, right, for the Federal Reserve. It's about maximum employment, price stability, but they do keep a watch on financial conditions and stability as well, but not at the risk of that initial important dual mandate. At least that's what John Williams, the head of the New York Fed, had to say at an event earlier today. Check it out.
Using monetary policy to mitigate financial stability vulnerabilities can lead to unfavorable outcomes for the economy. And monetary policy should not try to be the jack of all trades and a master of none.
All right, the president of the New York Fed, John Williams, certainly a very important voice when it comes to FOMC policy, but just reminding everybody that the Fed's policy is about price stability and maximum employment, even whatever happens in the financial markets. Although, right, we know they watch the financial markets.
Okay, so what does that mean for next month's meeting? Does it mean 50 or 75? And that's still what everybody's trying to dig into. And we did just hear from comments from Christopher Waller, who said that he would be comfortable with a 50 basis point increase, given what we've seen over the last couple of weeks with economic data.
Yeah, and then Mary Daly, of course, also making it clear that they're nowhere near the end of their tightening cycle. That doesn't necessarily mean that they're continuing to go at 75, but I think trying to temper expectations here that any sort of pivot is in the works.
And Waller has been a more hawkish voice, so it's interesting to see him, kind of maybe dial back a little bit.
Speaking of hawkish, did you guys see the Goldman Sachs economic outlook that they put out, talking about that terminal rate? They're also adjusting it higher from 5.25 to now, that was up from a previous call of about 4.75 to 5. So they're still thinking that a terminal rate is going up just a little bit, and that was well in the face of maybe 50 in December, and a call that they were also thinking about 325 moves early next year as well. And I haven't really heard 3 next year. I've been hearing a lot about maybe a February or a March, but they were also looking at a 3rd additional.
Can we talk a little bit about Target's results this morning? Because I'm having trouble.
If we say no, will we not?
Well, I'll talk about
I
them.
call it Target.
Well, I think that's part of, that could be part of the issue, right? It's more discretionary than it is, Walmart, for example, right? It's really a tale of 2 different types of companies that are reporting right now. Yeah. But how do you explain strong results from a company like Lowe's, but weakness from a company like Target, if we're talking in the context of discretionary? Is this a Target problem, or is this a
And I don't think
problem?
Target and Walmart is as different as I think a lot of people make them out to be. And so I think there are also some execution issues with regards to Brian Cornell and what he's been doing. Something that he's fessed up to in the past with regards to inventory control. The inventory
was it $400 million in shrinkage this year?
I don't remember that, but it's but it gets to the issue of execution and how these CEOs sort of navigate it. And even though they could maybe be serving similar customers, the question is, are they serving them well? And I think when we get Macy's tomorrow, maybe that'll be a little bit. Because that's ultimately discretionary, much more so than a Lowe's and a Walmart.
TJ Maxx did well, right? Yeah. And again, that's seeking out a great value and
everyone
fortune.
Loves a rummage sale.
What? Come on, who doesn't love a good deal?
Yeah.
And don't remain, you just have to be a good digger. You have to be a good hunter. You have to hunt for those great sales.
I'm a gatherer.
Yeah.
You are a gatherer. All right, guys, we're going to continue this conversation. We'll be back. Our cross-platform coverage, Beyond the Bell. We count you down to the close on radio, TV, on YouTube, and also on Bloomberg Quick Take. We'll be back at 4 p.m. Wall Street time.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's interesting. Carol Masser, Tim Stenovic. We're going to head back to Romaine and Taylor at 4 p.m. Wall Street time. We will count you down to the closing bell. But I do also think as we get these Fed speakers, you have to think about, are they voting members? Are they not? Are they someone that is part of the core in terms of...
It's a good point.
I always...
we treat them all equally is what you're saying, and we shouldn't.
Like the head of the New York Fed, always an important voice. Vice chair. It's interesting, just to see who might really help in having a better understanding.
But they're still influential, right? Because
policy.
they listen to one another.
Well, everybody has a vote, right? Everybody has a say, but maybe some have...
Unless they're non-voting.
Well, right, exactly. Well, voting members all have a vote. No, but
they listen to each other like commentary, right?
Yeah.
That's what I'm saying. It's just because somebody can't vote doesn't mean they're not influential.
Exactly. So it's interesting. I do feel like, and I go back to that Charlie Evans comment. I think it was CNBC. Was it a month, 6 weeks? I don't know. I'd have to look back at the date.
Carol.
But started to talk about that maybe we were coming to the end, early next year in terms of rate increases. Doesn't mean we'll start cutting, but I do feel like there's more momentum around this about like a point to where this comes to an end in terms of increases.
Okay, but an end doesn't mean we start to cut.
No, exactly.
It means, what do we hold it there for a year? What's the long and variable lag that Jerome Powell continues to refer to?
Data dependent, depends on inflation. And, we talked to Carlos Gutierrez, former U.S. Commerce Secretary, talking about the pushback against globalization, the impact on supply chains, more of them being in your backyard, that will lead to higher costs for everyone. And that's more static. Sorry.
All right.
Sorry, everybody. But it just feels that way.
It does.
Talking about empty shelves.
Pharmacies,
so many people, right?
Grocery stores.
We're seeing it.
Still.
All right, lots more to come certainly here on Business Week. In the meantime, lots more to come when it comes to world and national news. And on it all is Denise Pellegrini. She's in our newsroom. Hey, Denise.
Yeah, thank you, Carolyn. Blackstone CEO Steven Schwarzman says he's not going to back former President Trump for re-election in 2024, as we've been reporting. And yesterday we heard something similar from hedge fund giant Ken Griffin. And BGov editor Megan Crane tells us that could actually help Trump be seen as more of a populist.
Trying to maybe step back from being the standard bearer of the Republican Party in a traditional sense and reclaim his sort of insurgent mantle and, the representative of the little guy or the small donors and the forgotten people who he would always talk about how he represented.
And Crane with us there on Bloomberg Business Week here on Bloomberg Radio. And aides to President Biden, meantime, have been preparing for former President Trump's third White House run well before he made it official recently. And Bloomberg's Nathan Hager reports on that part of the story from Washington.
A small group of Biden advisors has reportedly been working on what they call the Trump Project. It's a plan to respond to the stream of attacks they're expecting now from the former president, now that he's made his run official. Aides tell the New York Times President Biden will continue to stress the threat to democracy he sees from the former president, and they say he'll make the case that former President Trump's 4 years in office did not lead to actual accomplishments for the American people. In Washington, I'm Nathan Hager, Bloomberg Radio.
Thank you, Nathan. And the Yale Law School is pulling out of the U.S. News and World Report Law School ranking. It's calling the process profoundly flawed. And Dean Heather Gerken says Yale does take the top spot every year, but says the rankings disincentivize programs that support public interest careers and other important things. Global News 24 hours a day. I'm Denise Pellegrini. This is Bloomberg.
All right, Denise, thank you so much. Carol Masser, Tim Stanovic, live here on Bloomberg Business Week on this Wednesday. We are on YouTube, Bloomberg Quick Take, and of course, always on Bloomberg Radio. Elon Musk.
I've heard of him.
Me too.
Yeah, he is very busy right now. When he's not tweeting, he's addressing the staff of Twitter, his latest company that is under his purview. He sent an email to Twitter employees requiring them to pledge to stay with the company, working long hours at, quote, high intensity during its transformation, or take a hike, accept a buyout.
Tick, 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 tick. No, it's not 60 minutes, but staff will have to complete the online form by 5 p.m. New York time tomorrow, Thursday, or accept 3-month severance. For Twitter to succeed, this is what Musk said in the email, quote, "We will need to be extremely hardcore." We saw this email, so this is why we can talk about exactly what he said. He said, here's more of the quote, "Only exceptional performance will constitute a passing grade." So if you got this email, you worked at Twitter, what would you do?
We reach out to an employment lawyer. That's what you do. Really? And in fact, that's what Kurt Wagner writes. Twitter employees have been reaching out to lawyers for advice on how to respond, according to people familiar with the matter.
Yeah. Hey, in the control room, what do we got? 1, 2, 3 people. Would you continue working or would you take severance? Would you continue working? Show of hands.
All right, we're like,
Looks like a lot of severance in there. One person saying, yeah.
Severance.
Okay, so not really, there's no standard deviation on that.
A representative for Twitter did not immediately respond to a request for comment. The Washington Post did earlier report this memo. Musk did say in the note that Twitter will be more dominated by engineers going forward, making up the majority of remaining employees and having the greatest influence at the company. Also said, Carol, that they're going to relaunch Twitter Blue, which the rollout has been nothing short of disastrous, as I know you guys covered last week with companies being impersonated on the platform.
Yeah, he did also say that Twitter, the reorganization taking up almost all of his time, I guess his pay deal is being challenged in court, what he got paid for at Tesla, right?
Yeah, there's a lot going on. By the way, the ads that I see on Twitter are just totally bizarre now. I tweeted about them.
Oh, you did? I saw you. I wasn't quite sure what that was all about.
I don't know if you liked the tweet. You got to go back and like the tweet, though.
I'll try and like. Tesla shares down 4%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index all in the red. Let's find out why as we head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading in the red right now. Dow is currently down 47 points. S&P's dropped 36. Well, the NASDAQ is off by 1.6%. The U.S. 10-year yield falls to 3.68%. Gold is down 5. Oil is trading in the red. And Bitcoin is lower by 2.2%. Among the main 11 S&P sectors, only utilities and staples were in the green. And leaders to the upside in the Dow, McDonald's, UNH, and Home Depot, while Salesforce and Intel fell 4% and led to the downside. After earnings, Advanced Auto Parts fell 15%. Target plunged 12%, while Lowe's rose 3.3%. In other news, the Fed's Walrus says is getting more comfortable with a half-point rate hike in December. And wrapping things up, Cisco and NVIDIA report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney.
Okay, we thank you very much, Bill, to hear live breaking news over your Bloomberg-type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you. We really appreciate it. Well, this story broke late yesterday. I think Charlie was breaking the headlines. Tim, you were breaking them. Came after the close, caught our attention. In fact, everyone's attention. It was about the Apple pivot when it comes to chips.
Yeah, Tim Cook telling employees in Germany, retail and engineering employees, that he's going to begin sourcing chips for its devices from a plant under construction in Arizona. Mark Gurman's got the story. He's technology reporter for Bloomberg News. He joins us via Zoom from our Los Angeles bureau. A plant in Arizona, Mark. What is he talking about? Because there are multiple plants that are under construction in Arizona.
That's right. So I think he's talking about a TSMC plant. That's Taiwan Semiconductor. They're Apple's exclusive chip partner right now. They produce all of Apple's chips. These are the A-series chips, the M-series chips, you name it, that go into the Apple Watch, the iPhone, the iPad, the Mac, the Apple TV, the AirPods, pretty much any of their main devices. Those are produced there. And now this Arizona plant's coming online in 2024, and so Apple will start transitioning and buying out of that plant. And Cook basically said the reason is from a strategic position, it's not a good idea to have all of your output for your most important component coming out of one geo. You kind of want to spread that around globally. And so Arizona is a spot, thanks to the 50 billion plus CHIPS Act with the latest administration in the U.S. And so they'll be pushing chips from there. He also mentioned Europe. Europe has some complementary bills to the CHIP Act coming online, and there are talks between TSMC, again, Apple's exclusive manufacturer for chips, as well as with the government of Germany. So you could see chips coming out of Taiwan, Arizona, and Germany in just a few years.
I feel like it's an Apple and a TSMC story in a big way, especially as we look at, or what we've talked about over the last month or so, between concerns about what China and its maybe what it wants to do in terms of Taiwan specifically and what it would mean, the implications for TSMC. It's a big story. We also talked, Mark, with the former U.S. Commerce Secretary Carlos Gutierrez, we talked about Apple in your story with him, how that we are increasingly going to see this among companies setting up shop in their own backyard. It's just kind of this pushback against globalization. But when Apple does it, and they've been revered so much because of their global supply chain, it feels like it says a lot more. Help us out with that.
Well, the interesting thing about Apple and chips in the U.S. is that more than a pivot, this is also a reversal. So little known fact, when Apple started making their A-series chips, over a decade ago, that production was handled, some of it was handled by Samsung, right? And so Samsung had a plant in Texas to manufacture these chips on Apple's behalf. And so you've seen Apple manufacture chips in the U.S. in the past. That was scrapped years ago when it became more efficient and cheaper and more technically sound to manufacture via TSMC in Taiwan. So for Apple, it's a bit of a reversal. And I think once a big name is placed on this CHIPS Act, a name as big as Apple, you will see other companies, Qualcomm, partners of Intel, wanting to rush to get in on that U.S.-based manufacturing. And as Tim mentioned, and you mentioned as well, TSMC is not the only show in town for the U.S. in terms of chip manufacturing. You have Intel, you have other companies trying to play into it as well.
Mark, I actually drove by this facility being constructed last week inadvertently. We're on vacation in Arizona. I know. We were on vacation. We were driving from Phoenix up to Sedona.
No pictures?
And in No, I was driving, and I looked out to my left as I was driving north, and there were dozens of cranes. And I said to my wife, "What is that? We got to Google what that is." And she's like, "That's the TSMC plant that's going up." Mark, this is wild. An article in a local newspaper from AZ Central from June says that there were 38 cranes there in June of this year. What else
have Apple logos?
Sorry, they did not. I did not see any Apple logos. But I'm wondering, who else are they going to be manufacturing chips for? I mean, how big of a customer is Apple for this specific plant?
Will there be an Apple logo on it, maybe?
I don't think there'll be an Apple logo. What we do know is that Apple is obviously not the only TSMC customer, right? Qualcomm and many of the other companies that need chip manufacturing done, they do rely on TSMC for that. So Apple is definitely not the only customer, just like Apple is not the only Foxconn customer. At this point, we don't know how big of a customer Apple will be for this plant. We don't know if this plant was built for Apple. What we're told is that this plant, at least what TSMC is saying publicly, is that it will start with a 20,000 per month chip output. So it will only be able to build 20,000 chips per month. And it will only be on the 5 nanometer technical process to begin with, the production process, I should say. Here's the problem. Apple volumes, much bigger than 20K a month. Apple technology, they'll be ahead of 5 nanometer by 2024. They'll be a 3 nanometer or 3+ nanometer. So at this point, what we're thinking is that maybe only the legacy chips will be made at the get-go, or it's possible that the specifications of this plant, once Apple recently got involved, they're going to be tweaked to move to Apple-needed production processes and Apple-like quantities. I think it's going to be a while before we know how really involved or how exclusive this Apple-TSMC relationship might be in Arizona. My personal guess, and reading between the lines in Tim's comments, he said we'll be buying out of this plant. He didn't mention TSMC. And the implication of buying out of this plant, to me, indicates that this is not going to be an Apple exclusive relationship. You'll see some of Apple's chip rivals and other companies be buying out of that. Apple being one, but a significant customer, at least in name.
Mark, 10 seconds here, but the final assembly, still a lot of that for Apple products happens in China. Is that going to change anytime soon? Very quickly.
I don't think that's going to change. You're seeing them go to some of the peripheral countries around China, but I think for the most part, they'll be standstill for at least the next 5 to 10 years.
All right. As always, Mark Gurman, thank you so much. Really appreciate it. Mark Gurman there in our LA bureau joining us via Zoom. He is Bloomberg News technology reporter. Hey, folks, this was a Bloomberg exclusive, and we were all over it when it crossed late yesterday and, of course, today. Apple shares, though, a little bit lower in the trade. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I have to say, one of the things I love is tracking how things are moving around the country. Like I was looking at the Dow Transport's down about 2% today. Like I just think
I
it's...
thought you were going to say tracking packages like that you were.
Well, that's part of it,
Okay.
right? Like how things move around is always a great indicator of what's going on in the economy.
Well, let's talk to the CEO and co-founder of a firm that handles quite a bit when it comes to e-commerce. We're going to be doing that in just a second. First up, though, Charlie Pellet, we got less than a half hour to go.
Indeed, and roughly 30 minutes until we get the latest numbers out of both NVIDIA and also Cisco Systems. We're looking at a lower move here for the U.S. stock market. Fed Wednesday, not quite, but certainly it's what the Federal Reserve may or may not be thinking after the retail sales data that is affecting sentiment today. Stocks are dropping with the S&P down 32 right now, drop there of 0.8%. We've got the Dow lower by 18 points, down there by about 0.1%. NASDAQ in the red by 182 points, a decline there of 1.6%. Stocks fell after strong retail sales and at least two Federal Reserve speakers recast bets that the central bank's policy tightening regime is nearing an end. The 10-year yield right now 3.67% with the 2-year 4.35%. Spot gold down $3 the ounce to $17.75, a decline there of 0.2%. West Texas Intermediate crude down 1.8% at $85.47 a barrel. Lots of retailers reporting earnings this morning. A mixed bag. We have got Target shares trading lower now by 13.3%. It did warn in its latest report that shoppers are pulling back. Home improvement retailer Lowe's raising its profit forecast. We have got Lowe's shares up now by 2.9%. And the off-price retailer TJX reported better than expected quarterly comparable sales at its TJ Maxx and Marshall stores, which the company says were driven by strong apparel sales. So as for the overall retail backdrop, Dana Telsey is Chief Research Officer at Telsey Advisory Group.
You look where the value is, everyone's competing on promotion today, which is different than 365 days ago. But you look at TJX's numbers today, which are better than expected, and frankly, even the guidance, it was nice to see how they're setting up. They're getting better brands at more valuable prices, and so is there some share shifts that's going on, and is off-price returning?
And again, TJX up now by 4.6%. Recapping, stocks are lower. 27 minutes to go ahead of the closing bell, with the S&P down 35, a drop there of 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Our next guest knows a lot about getting packages shipped, especially when it comes to the e-commerce world. So delighted to get to our next guest.
We got Lauren Behrens-Wu, co-founder and CEO of Shippo. She joins us via Zoom from the San Francisco Bay Area. Laura, great to chat with you once again. So you've got tons of thousands of businesses that Shippo serves. You work to use software to get them the best deals on their shipping. Give us an idea. I want to talk about business in a second, but just give us an idea of what you're seeing when it comes to the economy out there, because we're getting mixed reports from some of the biggest retailers out there.
Yeah, it's great to be on Bloomberg Radio today. Thanks for having me. And then just to kind of set the stage around what we do here at Shippo. So we're a software platform that connects e-commerce companies to a network of different shipping providers. So all of our customers, they need to ship. They're selling products on the internet, and they need to move their products from A to B to the customers. And we're building that software component there. The carriers are doing the heavy lifting, they're doing the shipping, and we're building the technology, giving access to discounted shipping rates, and just helping SMBs ship like retail giants. And now to your question around what we're seeing, it is a difficult prediction for this holiday season. I think what's for sure happening is that in previous years, we've seen that there was a big spike around the big deal days like Black Friday and Cyber Monday, and we're seeing that change. We're seeing elevated shipping and elevated discounts just way earlier in the season, which is a very interesting trend.
Interesting.
We don't think that there will be as big of a spike on these two big normal deal days, but those deals are happening much earlier in the season nowadays. And customers or consumers are getting access to discounted products earlier on.
I was going to say, Laura, I mean, I had to pick up something for my daughter, and she's like, hey, Mom, there's already a Black Friday sale, so you can get it now. So it's definitely happened. Having said that, I do like talking to folks like you because you do have a great indication of what's going on in the macro environment. What you are seeing in terms of activity and the upcoming holidays, does it speak recession to you?
So we're for sure looking at a much softer Q4 compared to previous Q4s, but previous Q4s were out of the ordinary as well, with pandemic limiting us from like going to physical stores. So this year we're seeing a little bit of back to the previous trend lines. And then
so 2019 kind of, or below 2019?
2019 kind of, that is what we're expecting. Also because consumers still have a lot of, like the job market is still going strong. Consumer spending is still doing okay, but it's very hard to predict. I think we're like next year, we're for sure looking at a recession year. And we're thinking that this holiday season will still be a good year or a good season for retailers.
Remind us too, you talked about the business and we appreciate you reminding our audience about what it is exactly that you guys do, but you do play into the e-commerce sector. I mean, who is your typical customer?
Yeah, our typical customer is an SMB merchant. So merchants that are selling things on the internet.
What's SMB?
SMB is between 500 and 5,000 packages a month. So it's a pretty wide range here. But our typical customer ships anything from fashion to makeup, anything you can buy on the internet. And we've actually seen an explosion in the SMB segment during the pandemic, like more businesses getting started, more businesses moving online. So that's the perfect audience for us. And we're not enterprise, so Amazon and Target and Walmart are out of scope for us. But like the smaller mid-market SMB and mid-market segment, that's our customer.
What makes you so confident that we're going to see a recession next year? What's the data that you can point to that indicates that?
Yeah, it looks like all indicators. The tech market is softening. We're seeing rounds of layoffs in the tech industry that will affect other industries later on as well. And I think that is just causing the negative spiral there to consumer spending being worse. And people are just not willing to spend on discretionary products. Inflation is at a record high, and we're seeing the gas prices rising. So all indications lead to a recession year next year. But I'm not an economist, so fingers crossed that I'm wrong.
All right. Yeah. Well, no, but you have a great, view and vantage point when it comes to, especially when it comes to small and medium businesses, which is so much the backbone of the U.S. economy. Laura, thank you so much. Great to spend some time with you. Laura Behrens-Wu, co-founder, CEO of Shippo, joining us via Zoom from the San Francisco Bay Area. Do you want to mention some headlines crossing the Bloomberg terminal? BlockFi, cryptocurrency lender BlockFi, preparing to file for bankruptcy within days. This according to people with knowledge of the matter who asked not to be named because discussions are private. The crypto lender paused client withdrawal, citing uncertainties with FTX, while saying it had adequate liquidity and was exploring options with outside advisors.
That's some big news in the crypto space.
This is the
from
contagion,
FTX.
right?
Yeah, it continues. We're going to keep digging into that. In the meantime, let's get a check on the latest world and national news. Denise Pellegrini is in the newsroom. Hey, Denise.
Hey there, Tim. And looking at Bitcoin, it's down about 2% right now, 16,554. So we'll see. And turning to Poland and Ukraine, U.S. officials say the deadly missile that exploded in Poland close to the Ukrainian border was likely a Ukrainian air defense missile that veered off target. Ukrainian President Zelensky claims that missile wasn't theirs. He says it came from Russia. Former Defense Department official Mick Mulroy, though, saying no matter what, Russia is still to blame, and the situation is dangerous.
Of course, they wouldn't have had to shoot those missiles if they weren't being attacked by Russia. And certainly targets on the border could cause this, not only this, but also in the future, as it's unknown where a missile would go after it intercepts one.
And that's former Defense Department official Mick Mulroy. A longtime Trump supporter and Republican megadonor says he's not backing Donald Trump's bid for the White House. More from Bloomberg's Amy Morris in Washington.
Blackstone Chief Executive Officer Steven Schwartzman says it is time for the party to move on, releasing a statement saying they should turn to a new generation. This just days after Citadel's founder, Ken Griffin, called Trump a three-time loser who should not run again. Trump might not miss the money. He already has a massive war chest. But this could give cover to other elected officials who are still deciding who to back and could embolden challengers for the GOP nomination for president. In Washington, I'm Amy Morris, Bloomberg Radio.
Thank you, Amy. And Mitch McConnell has been reelected as Senate leader. That's in spite of a revolt after the GOP's unexpectedly poor showing in the midterms. He'll continue as Senate Minority Leader, overcoming a challenge from Florida Senator Rick Scott. Global News 24 hours a day at On Bloomberg Quick Take. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. So a lot going on. We mentioned BlockFi said to plan an imminent bankruptcy amid FTX fallout. That story, this is according to people familiar with the matter. So we're watching a lot of headlines crossing as we speak. In the meantime, something one of our guests just referred to, and that is tech layoffs.
Yeah, we just heard from Laura Behrens-Wu, the founder and CEO of Shippo, and I asked her what indicated to her that there was a recession imminent next year, and she pointed to tech layoffs. We saw a lot last week with Meta Platforms, the company formerly known as Facebook. As we've been reporting throughout this week, we're seeing them with Amazon. The latest from Spencer Soper says that Amazon workers fear no one is safe as mass layoffs roil the company's staff.
No one is safe. So wrote an Amazon.com employee on an internal chat room as the company began the largest round of layoffs in its history. The mood, especially in the hard-hit devices team, reflected the shock and dismay of people more accustomed to growing budgets and moonshots than talk of recession and austerity. And I guess there is, in these chat rooms, according to Spencer's reporting, that some staff are wondering why Amazon CEO Andy Jassy hasn't addressed the troops as of yet.
Yeah, in a similar way to the way that Mark Zuckerberg did last week when he announced job cuts at Meta Platforms. Device chief Dave Limp, in a note to his team on Wednesday, said that the firings pained him. He also pledged severance payments for people who can't find other jobs within the company. Carol, lacking clarity from managers, employees are seeking clues from one another about which team or worker could be the next one cut.
This internal chat, we mentioned this post by an employee who wrote, an Amazon employee wrote in an internal chat. Here's a quote, and Bloomberg has reviewed it. The lack of transparency from leadership is frankly disgusting. How can we expect to be Earth's greatest employer if literally everyone in the company is trying to figure out if they will be keeping their jobs? Amazon, through a spokeswoman, declined to address employee concerns about Jassy not addressing staff. To be fair, too, and to, part of the problem is, Amazon has been a company that just continues to add workers. So this is a very different tone and action by the company.
They've got more than 1 million employees, but many of them are hourly or warehouse employees. This 10,000 jobs is what Amazon is planning to cut. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all in the red, with the S&P down now by 28 points, drop there of 0.7%. Choppy day for the Dow, but right now lower by 6 points, a decline there of less than 0.1%. NASDAQ down 166 points, a drop right now of just about 1.5%. Stocks are lower as traders sift through this morning's stronger than expected retail data, along with some Fed speak. The 10-year yield 3.67%. The 2 years yielding 4.34%. Spot gold down $4 the ounce, lower by 0.2%. West Texas Intermediate crude down 1.7%, 85.46 a barrel on West Texas Intermediate crude. Bitcoin now down by 1.9%. We've got Bitcoin at 16,567. Sources tell Bloomberg the cryptocurrency lender BlockFi is preparing to file for bankruptcy within days. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. It is 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Investors have been celebrating recent inflation data, which showed both consumer and producer prices rising by less than expected in October. But don't get carried away by a single month's numbers. It's too soon to be sure that the pace of monetary tightening can be safely scaled back. New supply-side shocks would change everything, and Congress has to avoid throwing a wrench into the works. And before the Federal Reserve makes its next interest rate decision in December, it will have another inflation report and new labor market data to consider. For the moment, then, investors would be wise to rein in their joy. The fight to control inflation has a long way to go. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just got about 10 minutes left in today's trading session. It's been a little bit of a tortured trade, if you will. Little change, though, but mostly it's the technology names, as we heard from Charlie, under pressure today. Just a reminder, NASDAQ down about almost 1.4%. S&P, though, just down about 0.6%, and call it flat, slightly higher on the Dow Jones Industrial Average.
Yeah, but follows a couple days of gains for the major
Incredible
averages.
week
and a
last
great
week.
week last week. And that's what I want to talk to Emily Hill about. She's founding partner at Bowerstock Capital Partners. They've got about $800 million in assets under management. Emily joins us on the phone from Lawrence, Kansas. Emily, how are you?
Oh, how are you?
It's good to have you back with us. Hey, we're grateful for the notes that you sent to our producer, Paul Brennan, and I'm seeing that you're saying that we're in a bear market rally right now. What makes you say that?
Well, I think I'm not alone in suspecting that this is a bear market rally. You know, I think this is very similar. It's a redo of what we saw in July. There's still so much liquidity in the market that people are looking for any kind of signal from the Fed that can be that can lead to optimism. So I think what we're going to see is in the first quarter a revisiting of the lows we saw in June and again in October. And I think the primary driver for that will be the fourth quarter earnings reporting season. It just takes time for higher interest rates, strong dollar, tight labor market to feed through into earnings. And I don't think we saw the full impact of that in the third quarter. Earnings were really a mixed bag. But I think this rally is overdone. And again, I don't think I'm alone in believing that. And in fact, the one thing that gives me pause is that I'm so positive that it's a bear market rally that I'm must be wrong.
Too much conviction.
I'm rarely this positive of anything. So.
It does feel like sometimes there's some significant swings, Emily, in terms of sentiment. You know, when things are going bad, it does feel like everybody kind of overdoes it to the downside, and then all of a sudden, wait, everything's okay, and we're rallying. You know, like everyone said this was going to be a volatile year. I think that's about the one thing we could count on here in 2022.
Well, I agree, and I think people have to remember that this is still a liquidity-driven market, and it has been for years. And normalizing this market is going to be a lengthy process. So every optimism-driven rally that we have like this delays the normalization process. This is not what this is the last thing the Fed wants, is these bursts of euphoria. So,
You're taking me back to the spring when Jay Powell just came out and crushed the rally. Like, do you think he's going to do that again?
Well, I listened to the same, you're probably talking about, I think it was July, when there was just this huge rally based on what Chairman Powell said in the meeting, and I listened to the exact same conversation and did not see any optimism in that speech. So my team laughed about it. We're an all-female team, and we call it the testosterone-driven rally. I mean, I don't know where they were getting reasons for optimism and what he said.
Well, I know, and I do wonder too, Emily, I mean, we can go all macro here, and I feel like on any given day, we can make a different macro story sometimes based on the economic data points or what Fed officials are saying. But when it comes to, the bottom line, I mean, you have to put money to work for your investors. So how do you do it in this environment? Where do you do it?
That's a very good question. For people who have had liquidity events in the last year and have substantial amounts of cash, and I do have a number of investors like that, I think it's important to start putting money gradually to work now, because as I said, I could be wrong, and there's so much happening globally. All it would take would be some kind of resolution to the Russian-Ukraine conflict or all sorts of things out of our control that could really turn this around. So it is important to keep putting money to work, and if you're a long-term strategic investor, stay invested. But we are leaning more into cash equivalents. I know they're not very exciting, but T-bills yielding almost 4.5% maturing next May. This is a really good time, frankly. We haven't seen yields like that in T-bills in years, and there are worse places to be than that. I think we're in a U-shaped downturn here, and I think it's probably going to be into the second half of next year before we pull out of this. So that's a good place to park cash in the meantime.
But you're not. Is there an equity play here?
I do like small cap stocks.
Okay.
Small cap stocks are trading.
You always like small caps. I say that with respect. Yeah, you've liked small caps when you've been on with us before. Is that really kind of your sweet spot?
Well, right now, small cap is trading at a bigger discount to large cap stocks than they have been since the early 2000s. So just on a relative value basis, they're significantly more attractive. So, does that mean that they're going to that they're going to pay off in 3 months or 5 months? No. But in terms of long-term investors, this is a really good time to invest in small cap.
When you say,
I also think.
Oh yeah, go ahead. Sorry, Emily.
Yeah, we also like some international markets, but we definitely hedge our currency exposure because I think we're likely to continue to have a strong dollar.
Emily, before we let you go, you said gradual. If some of your clients have cash positions right now to start deploying them into the market, what do you mean by gradual? Like, how should they be dollar cost averaging?
Well, we have a long-term, we will set a plan, and it may be, in this case, we're using a lot of 9-month plans, 9 to 12-month plans, where we have a long-term strategic asset allocation strategy, and we're investing a certain amount per month. But we also have triggers. And what I mean by that is, if the market drops beyond something we expect, then we're going to accelerate that. So it's a little bit of rigorous entry strategy combined with, some tactical maneuvering.
All right, we're going to leave it on that note. Hey, Emily, thank you so much for joining us on this Wednesday. Emily Hill, she is founding partner at Bowersock Capital Partners. They've got $800 million in assets under management. Joining us on the phone from Lawrence, Kansas. So interesting. I have to say, Tim, it does feel like there's some momentum about concerns about 2023. Certainly, at least early in the year, I think about what Emily was saying. I think about the company that we talked with, Shippo, the CEO, concerns talking about recession. It does feel like the conversation is shifting a little bit.
Yeah, but as Katie Greifeld has said, like, are we going to talk ourselves into a recession?
We could. Sentiment can be pretty powerful if everybody steps back. But if you're losing a job and you're not making money, you don't have a choice. You don't talk yourself into it. You just don't have the money. All right, folks, we're going to head over to our TV colleagues, our cross-platform coverage, counting you down to the close on radio, TV, YouTube, and on Bloomberg Quick Take.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Taylor Riggs, and we're counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast with Carol Masser and Tim Stenovic. Welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube and Quick Take. Carol, stocks right now not far off the lows of the day.
No, exactly. They've kind of been bouncing around, but as you said, definitely well off their best levels of the session. Having a really tough time. We talked about it earlier. You did, I did, and that is the chip sector continuing to be under pressure, off its lows, but just barely, still down more than 4%. I'm thinking about NVIDIA, which is down about 4% as well. Micron was the one that weighed on the market, talking about maybe some weakness for 2023. NVIDIA will report, Tim, after the close. Let's see whether or not it's a pig pile on in terms of bad sentiment or whether they can help turn things around.
Yeah, definitely a shift from what we saw last week. And speaking of last week, we are up 10% on the S&P 500 from our lows in October, Taylor. But Emily Hill, the founding partner at Bowersock Capital Partners, says proceed with caution. She says this is a bear market redo of what we saw back in July, where essentially investors are looking for any sort of signal from the Fed that can lead to optimism. Kind of what we saw post, what we saw over the summer when Jay Powell had to come out and kind of squash the rally.
I'm just glad you didn't call it a dead cat bounce, because then I'd have to go to Romaine and rename it a dead dog bounce, and he doesn't like me.
Why do we have to use
away
pets
from
with
our
these
dogs.
terms?
Stay away from our puppies.
Thank you. Thank you, Carol.
You're welcome.
Solidarity. With
But Taylor and I are both cat people.
And we're both Cowley people, Tim.
There we go. We got to stick together.
All right, well, that explains a lot. Let's see if we can explain the markets here with the Dow Jones Industrial Average lower by roughly 30 points. We're waiting for these numbers to settle, but the Dow had been oscillating between gains and losses. It had been one of the few bright spots trying to hold into the green, but it looks like it's going to finish the day in the red, down by roughly 0.1%. The S&P 500 going to finish lower by about 0.8%, right around that 39.59 level here. So there's been a relatively tight trading range right now for the S&P over the last few days, where it's really tested that resistance at the top and the support below it here. Hasn't really been able to break through either to the upside or the down. NASDAQ Composite down 175 points or 1.5%, Carol, and the Russell 2000 going to finish the day lower by 1.9%.
Romaine, I'm always scratching my head when we've got kind of a day where we're bouncing around a bit in terms of the trade, and then you've got the VIX actually heading lower. It just never makes sense to me. Right now, the VIX settling in at 24.20, Taylor.
Yeah, well said, Carol. Take a look at where we are underneath the surface, sort of 2 levels underneath that headline index. Things don't actually look that bad. There's still a lot of sectors in the green under some of those, quote, best performers, but it's defensive, Carol, and that's really where that trade comes in. Utilities, insurance, food and beverage, household products, food and staples. Does that sound like a theme? Does that sound familiar? Those are all up 0.3 to almost 1% on the day. There were still a lot of losers, though, when you think about some of the worst performers on the day, and that's where it really does look like that classic risk-off trade. Transportation, energy, auto components, and semiconductors. And, Carol, those are off anywhere from 2 to 4% on the session.
All right, let me get to some of the gainers here. I was kind of all in on retail because they were certainly some of the standouts in today's session, finishing off their best levels, but nonetheless lows, eking out about a 3%, not eking out, certainly all in, a 3% gain in today's session. And that was good enough for making it top in the S&P 500, or among the top. They raised their profit forecast for the year. Comp sales forecast a little bit less optimistic than its quarterly last report. But key, and we talked about this earlier, it's kind of individual individual homeowners, do-it-yourselfers, they were out there shopping in a big way. TJX, home-to-home goods, Marshalls, and TJ Maxx, it was up 5.2% in today's session, again among the top gainers in the S&P 500. Better than expected comp sales at TJ Maxx and Marshalls in particular, which the company said were driven by strong apparent sales. Company continuing to expect to repurchase roughly 2.25 to 2.5 billion of TJX stock in fiscal 2023. I always think that's important to point out. And then another one, Discover Financial, it was up about 2.4%. This after the company came out and said the investigation into its student loan servicing practices had been completed, and it will therefore resume buybacks under the existing program of up to $4.2 billion. Keep in mind, this company has faced a fair amount of regulatory scrutiny for its student loan business for several years, but nonetheless, investors, Tim, moving into this name today.
Okay, I'll get to my decliners in a second, but in the meantime, some breaking news when it comes to crypto. FTX saying that Sam Bankman-Fried has, quote, no ongoing role at the company. The company, FTX, saying that in a tweet. The company also saying that SBF does not speak on behalf of FTX, FTX US, or Alameda. Those are all affiliates of the parent company of FTX, of course. If you spent any time on Twitter or following the story over the last week or so, Sam Bankman-Fried has also been spending a lot of time tweeting. And you can imagine that people who are handling the bankruptcy are probably not happy about that.
Yeah, because I was wondering if that's what they're referring to, the multiple tweet storms that he seems to be going
24 is the latest, right?
Explaining, of course, his take on things, and more importantly, I guess, FTX's take, and FTX basically saying he has no take.
All right, let's get to some of the decliners. Carol, you talked a little bit about some of the gainers when it comes to retail. Target not looking so good when it comes to today's move, down more than 13% on the day. We've been talking about the story all day, but pretty disastrous earnings report. The company warning that shoppers are pulling back, and Brian Cornell saying that guests' shopping behavior has increasingly been impacted by inflation, rising rates, and economic uncertainty. Advance Auto Parts down 15% today. The company missed estimates for EPS after the bell yesterday. Did see UBS cut its recommendation to neutral from buy earlier today. And I'm also keeping an eye on Amazon. It did underperform both the NASDAQ and S&P 500. The company is beginning its largest round of layoffs in its history. Bloomberg is reporting that they're looking to cut about 10,000 jobs. The company does employ more than 1 million people. Many of those people, though, are, of course, working in those warehouses.
And just quickly, two other decliners I want to put on there. We were talking about this a little bit earlier on Bloomberg Television. D-Local closing lower by 51% on the day. And Zoom Info, not Zoom, but Zoom Info Technologies, finishing out at 14% lower.
ZI, different ticker, Romaine. You're always so smart to remind us of that. When in doubt, full faith and credit. Here we go. 2 days in a row now, a significant bid into full faith and credit. Bond price higher, yield lower. And Carol, what really catches my eye is, again, the focus on that front end of the yield curve where yields are rising. But further out, you're actually seeing a flight back into quality and a flight back into bonds. You had a very strong 20-year bond auction today, maybe a little bit of a bellwether of the strength and the demand of this sector underway. But really, it comes back to is 4% attractive, and where do you think yields are going with this Federal Reserve on the move?
Well, and what's really interesting is I do feel like there are conversations. We just talked with the CEO and founder of Shippo, and they were talking too about concerns about a recession in 2023. I feel like there's negative momentum. Cisco's out.
Yeah, Cisco earnings are crossing the wire right now. Shares higher in the aftermarket here. Here's their numbers here. They're looking at services revenue $3.39 billion. The street was looking for $3.45 billion. Fiscal first quarter adjusted EPS is coming in at 86 cents a share. The street was looking for 84 cents, and that's on the back of revenue of about 13.68. The guidance going forward, Taylor, for the fiscal second quarter, they're looking at EPS of 84 to 86, right around what the street was looking for. And as far as their revenue, full year revenue forecast, 4.5 to 6.5% growth. That is a slight nudge higher than what they had put out before, which is 4 to 6%, and the street was looking for 5.1. So 4.5 to 6.5% growth for the next fiscal year.
And we hear from Chuck Robbins, Chair, CEO of Cisco, saying the fiscal 23 off to a good start. They're talking about the largest quarterly revenue and second highest quarterly non-GAAP earnings per share in our histories. They're talking about the relevance of their strategy, their differentiated innovation, and their position to help customers. They're talking a lot about the strong results in the first quarter, continuing to make progress on that business transformation. That is the CFO of Cisco who is saying that, and talking again about the annualized recurring revenue increasing now to more than $23 billion. That is up 12%.
All right. Well, different story happening with Sonos, the company reporting its latest results. 2023 revenue forecast beating estimates. It still is higher in after hours, just by about 1%. We're actually going to be speaking with Patrick Spence, the company's CEO, on our program tomorrow as we continue to dig into these reports.
I want to go back to Cisco. I mean, this is a massive player, right? Those big networks and certainly institutional, or I should say, big clients, in terms of who are buying it. So to see this name up 5% in the after hours, I mean, tech spending, we know it's where, right, Remain, where companies spend, but they're upping their outlook. That fiscal year revenue, 4.5% to 6.5%. They had seen 4 to 6. Estimate out there is 5.1. This is pretty significant. And they did talk about kind of an easing supply situation, too, in that release.
And it's significant given the breadth of Cisco. I'm sure you already know this, Carol, but we talk about, the software that they sell for conferencing and networking. Of course, all the security products that they sell as well. Of course, they're in chips, they're in routers, they're in all this sort of Wi-Fi management space. So they cover a huge swath of the tech industry, both with regards to what companies spend on, but also in terms of what we ultimately spend on. Even though we may not be paying it directly to Cisco, we do indirectly.
Exactly.
We are hearing from Robinhood as well, reporting their monthly numbers here for October. Talking a lot, Carol, about the end of October monthly active users, about 12.5 million, net cumulative funded accounts, 22.9 million. That's up about 30,000 year over year. And again, you're up a little bit in terms of September to October for those monthly numbers. But again, just a monthly operating data that they're coming out with.
Yeah, Robinhood, though, down 47% so far this year, but a little bit of movement in the after hours. All right, guys, some earnings here on this Wednesday, but that's a wrap for our cross-platform coverage. Radio, TV, YouTube, and on Bloomberg Quick Take Beyond the Bell. We will see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on this Wednesday. As we mentioned, a little bit of earnings, Robinhood, Sonos, Cisco, they're really a standout here, up almost 4% in the after hours. Seems to be kind of firing on all cylinders. I'm looking for some more commentary to see what Chuck Robbins and his team have to say.
Well, speaking of commentary, digging into Sonos' press release, as I said, Patrick Spence, the CEO of the company, on our program tomorrow, and a much smaller company than Cisco, of course. But he did say in a statement, the macroeconomic backdrop became significantly more challenging in fiscal 2022, though he's proud of our team's tremendous ability to deliver our 17th consecutive year of revenue growth.
Yeah, that stock is down about 8% here in the after hours. It's a high-end consumer, Sonos, right? And in terms of, this was something that was big during the pandemic.
We'll chat with him tomorrow about it. Let's get to Denise Pellegrini in our newsroom. Hey, Denise.
Hey there. Same-sex marriage protections have just cleared a key Senate hurdle, and this could signal enough Republican support for passage of this. I'll have more on that coming up for you in my next report. Meantime, Mitch McConnell has been reelected Senate leader in spite of a revolt after the GOP's poor showing in the midterms. He overcame a challenge from Florida Senator Rick Scott, and Democratic Senator Ben Cardin of Maryland says just let the GOP keep bickering because...
I'm just glad it's the minority leader, not the majority leader.
And Cardin with us there on Balanced Power with Joe Matthew. Meantime, the U.S. and Poland both say yesterday's deadly explosion in Poland near Ukraine by a missile was not an attack by Russia. The U.S., NATO, and Poland all saying it looks like Ukraine's air defenses set it off. And Bloomberg's Maria Tadeo reports it came during a massive Russian missile barrage.
It was so bad that even the neighbors had blackouts. They had power down, and they're not even related or fighting this war.
Bloomberg's Maria Tadeo reporting from Brussels there. As we've been reporting, Apple plans to start sourcing chips for its devices from a plant under construction in Arizona. But former Secretary of Commerce Carlos Gutierrez says Apple and others will pay a price for these kinds of efforts.
Companies who bring manufacturing back, while that's very welcome from the standpoint of jobs, it does raise the cost.
And Guterres also telling us there on Bloomberg Business Week, companies that bring jobs back will face more competition as well from cheaper overseas manufacturers. And Elon Musk telling Twitter employees to accept hardcore Twitter or just think about leaving. He's telling employees to expect to work long hours. Sources say some of the employees are now consulting their lawyers. Global News 24 hours a day. I'm Denise Pellegrini.
All right, Denise, thank you so much. Carol Massar, Tim Stanovic here in our Bloomberg Interactive Brokers studio. Watching some of the earnings, I just want to do a quick rehash because there are stocks moving in the after hour. Cisco is up about 5%. This really has to do with what the company had to say about its fiscal year revenue. It looks like they're looking for greater growth, or the range is 4.5% to 6.5% fiscal revenue. They had seen 4 to 6%. The estimate out there is 5.1%. So that stock is moving up. Sonos is bouncing around, though.
Yeah, Sonos is bouncing around. It moved lower right when the numbers came out, Carol, then moved higher and then moved lower down as much as 7%. But as we speak, the stock continuing to bounce around, and looking at that, it's actually higher by 2% right now.
And Robinhood is just down about 0.4%. Seen a lot of pressure, certainly, though, on the stock in the year overall, and just getting some of those headlines in terms of their earnings as well. In the meantime, just a little lighter fare, folks, now that the market has closed up. This is on the Bloomberg terminals by our Devin Pendleton. Been following this since it really kind of came to view last week when it was said that Estee Lauder was considering maybe snapping up Tom Ford, and they put a ring on it.
They did. Fashion designer, that helps give him another title, right? He's a fashion designer, creative director, author, filmmaker, and now he's a billionaire. $2.8 billion is the price tag from Estee Lauder. It gives him a net worth of more than $2 billion. That's according to the Bloomberg Billionaires Index.
His story is so fascinating. First of all, for Estee Lauder, this is what they do, right? They have their core brands, had their core brands for years, but they have easily over the last 20 years or so have been buying other brands out that have more niche brands, more specific, identified with a designer, with I think about Bobbi Brown, I think about obviously Tom Ford. Just so many different brands have come under their umbrella. Tom Ford, though, a really interesting individual, fashion, his own perfumes, cosmetics, also making content.
Here's what he said about this purchase. Quote, "I could not be happier with this acquisition, as the Estee Lauder Companies is the ideal home for the brand."
He's going to stay on as the brand's creative visionary through the end of 2023. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting the latest numbers from Cisco Systems, the biggest maker of machines that run computer networks and the internet. Shares higher after hours, up by roughly 5%. Cisco delivering a bullish revenue forecast, helped by corporate and government spending on technology. We are awaiting the latest numbers from NVIDIA. As those cross the Bloomberg, we will pass them along to you as quickly as possible. Stocks today, end of the session lower. The Dow, the S&P, NASDAQ all finishing in the red. The S&P down 33 points, a drop today of 0.8%. Strong retail sales data and comments from at least two Fed speakers are recasting bets that the central bank's policy tightening regime is coming to an end. We've got the Dow down 39 points today, a drop there of 0.1%. NASDAQ today down 174 points, a drop of 1.5%. The 10-year yield 3.69%. The 2-year yield 4.36%. Spot gold down 0.2%, 17.74 the ounce. West Texas Intermediate crude down 1.8%, 85.33 a barrel. Bitcoin today down 2%, 16,546 on Bitcoin. Again, the Dow, the S&P, and NASDAQ all declining as we await the latest numbers out of NVIDIA. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, our next guest is an entrepreneur, sold his last startup for $100 million. He teaches about entrepreneurial leadership, about entrepreneurship and innovation at Princeton. His work applied at a bunch of companies as diverse as Goldman, Samsung, and IBM. We are talking about Derek Lido.
He's the founder and former CEO of iSupply. It was a company that was acquired by IHS back in 2010. Derek joins us via Zoom from New York City. Derek, good to have you with us this afternoon. How are you?
It's a real pleasure. Glad to be here.
Hey, before we get into the book, which I really want to talk about and is super interesting, I just want to get your view right now as a founder, as a professor, as a consultant. What are you seeing right now as you look across the economy?
Well, I'm seeing that we're actually deaccelerating relative to the innovation that is essential part of driving economic growth. And this is partly due to the fact that we're reevaluating technology and its role in the economy. But in doing so, we're not giving enough attention to the many other tech entrepreneurs that are doing a great job and essential to growth going forward.
Meaning who specifically? Do you have folks in mind?
I think that venture capital has quite a few pre-IPO companies that are poised to go public, but right now the markets are not receptive to them, and that logjam makes it hard for them to maintain their growth by hiring people. They're basically sort of biding their time here, and unfortunately, that means that the growth that they would be contributing, and then the boost that they would be giving productivity to the productivity of their customers, is something that we're going to miss out on for the next year or two, unfortunately.
So let's shift gears and talk a little bit about the book here, Derek. At what point did you sort of realize that you wanted to take what you've spent your career doing and put it in a book called The Entrepreneurs? I mean, what was that point for you?
That point was when I was invited to come and teach at Princeton, and that was a wonderful opportunity. I wanted to know more about entrepreneurship since I was an entrepreneur, and I couldn't find answers that I was looking for. And I felt it was essential that we understand where entrepreneurship came from in order to be able to help others and our students understand what their role could be in moving it forward.
So, okay. And I think it's, it's funny that We talk so much about innovation and disruption, Derek, at this moment in time. In an environment where we have, I feel like, the ultimate innovator and disruptor, and his name is Elon Musk. And I'm curious, as you did a historical perspective.
He disrupts the life of anyone who's covering him as a journalist.
Well, and he definitely communicates in a different way. You know, we see here he is the CEO of a publicly held company, Twitter not anymore, but, you know, out on Twitter, and, you know, it's hard to kind of get your head around it. But how do you put something like an Elon Musk as you think about history and you think about entrepreneurs and you think about innovation?
Well, it's interesting because Elon Musk is definitely pushing the envelope, and he's been enabled in this push by what entrepreneurs do best. And we don't recognize them for this, but they're really good at simplifying the task of managing and controlling large groups of people and very complex processes. So they've been doing that for, you know, hundreds and thousands of years, actually. But now it's gotten to the point where somebody as bold and audacious as Elon Musk can think that they can be CEO of 5 different companies at once. And
can he do it?
I think he's gone a bridge too far myself.
It seems like he's kind of talking about that too. I mean, in interviews that he's given over the last week, you know, he's done this before, but he's, you know, sleeping at Twitter, and he says he's going to sleep there until he fixes it. But yeah.
Yeah, but then something's going to go wrong at Tesla or the Boring Company or SpaceX.
When you look at history of the entrepreneurs, the innovation in a couple weeks where we are looking at a very innovative fintech space known as crypto, how do you think about that? And just got about 40 or 50 seconds.
Well, I think the history of entrepreneurship says that we should be asking the crypto entrepreneurs to regulate themselves as a first step. Legislators are just not going to be able to catch up with the pace of innovation with crypto right now. But entrepreneurs historically are really good at sussing out their competitors and colleagues. And if we ask them, hey, what minimal set of regulations should we put in there, they'll do a pretty good job of telling us.
I love that, and it's certainly a great layer on top of all of these FTX headlines that we've been talking about and the contagion within the crypto space. Derek, thank you so much. Derek Lido, founder and former CEO at iSupply, joining us via Zoom from New York City. His new book is called The Entrepreneurs, The Relentless Quest for Value. Do you want to mention NVIDIA out with results up about 3% in the aftermarket? Third quarter revenue, a beat, $5.93 billion versus the estimate of $5.79 billion. So that one is definitely kicking higher in the after hours. And I do want to point out, I mentioned some Robinhood numbers earlier in the stock moving, and this was an update on its October 2022 operating data. It wasn't earnings.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Gotta say, these kind of guests are always my favorite. Love talking with well-known chefs and restaurateurs, and we've certainly got one on tap for you. And I don't know if I've been teasing.
You should just give it away, Carol.
Emerald Lagasse's in the house, and we're going to get to him in just a moment.
First up, though, Charlie Pellet, lots happening in the after hours. Give us an update.
Indeed. Got to begin with NVIDIA. We've got third quarter revenue there coming in at $5.93 billion. The estimates there, 5.79%. We are looking at the stock bouncing around after hours, higher, lower, little change right now. Third quarter adjusted gross margin, 56.1%. Estimates there, 64.9%. But again, reporting revenue for the third quarter that did beat the average analyst estimate. Also reporting within the past 30 minutes or so, Cisco Systems. It is the biggest maker of machines that run computer networks and the internet. It delivered a bullish revenue forecast helped by corporate and government spending on technology. After hours, we've got Cisco Systems up by roughly 4.8%. The Dow, the S&P, and NASDAQ all end of the session lower today. Strong retail sales data and comments from at least two Federal Reserve speakers recast bets that the central bank's policy tightening regime is nearing an end. We had roughly 68% of S&P 500 companies ending today's session lower. S&P down 33, a drop there of 0.8%. The Dow today down 39, down 0.1%. NASDAQ down 174 points, a drop there of 1.5%. 10-year yield 3.68%, with the 2-year yielding 4.36%. Spot gold down 0.3%, 17.73 the ounce. West Texas Intermediate crude down 1.8%, 85.33 a barrel. So while it was a down day on Wall Street, as for the overall market outlook, Emily Hill is founding partner at Bowersock Capital Partners, and she was our guest right here on Bloomberg Business Week.
People have to remember that this is still a liquidity-driven market, and it has been for years. And normalizing this market is going to be a lengthy process. So every optimism-driven rally that we have like this delays the normalization process. This is not what this is the last thing the Fed wants.
And again, down day today with the S&P down 0.8%. Cisco, again after earnings, up 4.75%. I'm Charlie Pellet. Bam, that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it, and very funny, Charlie Pellet. I got to say that we are so blessed with having the best of the best when it comes to the world's great chefs, and that includes our next guest. Emerald Lagasse is in the house, world-renowned chef and restaurateur, host of Emerald Cooks on Roku. We're going to talk about that in just a moment, and he's here in our Interactive Brokers studio. So delighted. Welcome.
Thank you. Thanks for having me.
How are you doing?
I'm awesome.
You're awesome. You got a lot going on.
Well, a lot going on because we just debuted a couple of weeks ago the Tailgate Show on Roku, and now Friday we debut the Emerald Cooks. It's kind of like the Essence of Emerald show.
Yeah.
But speaking of the Essence of Emerald, that just wasn't enough for them, so they bought the library of Essence of Emerald and Emerald Live. So you now have an Emerald channel on Roku that you can just go on and stream when you want and catch maybe some old Emerald Live shows or some new Emerald Cook shows.
Which also just speaks to like how much content you have created over how many years?
It's been a few years.
I'm not trying to age you.
No. It's been a few years and a lot of content, and it continues. It's just like it doesn't stop because the restaurant business doesn't stop. If once you stop, then the customer stops, the excitement stops. The creativity has to keep going on. And you have to keep driving every single day. So that's the message of the staff every day. Let's get up today and let's try to do a little bit better than we did yesterday. And let's make it exciting so that the guests are excited to come back.
Well, it's interesting. I mean, I want to get back to the program and the show in just a minute. But before we do that, I want to get an update from you about what's been happening over the last couple of years.
Yeah.
Because
Speaking
when we
of
do
getting
speak,
up in the morning,
and
right?
speaking of sometimes things do stop, and we saw the world shut down during the pandemic, and I know that affected the restaurant industry so much. You had to close some restaurants during the pandemic. Talk about what the last 2.5 years were like for you.
Well, I was closed for a little over 2 years.
Do you ever think about that? Like closed
You know, it's
for 2
amazing.
years?
But you know, there's good and bad, right? So the good thing is that it gave me a chance to really be at home, which I never really had a lot of time to be at home with the family. It gave me a chance to really sort of dig in my inner soul to say, okay, where are we here? And, you know, where do we want to go and how are we going to get there? Because some things are great and some things aren't so great. And so what happens? I closed 7 restaurants. We have 5 open now, not counting the amazing bistro at sea at Carnival Cruise Line, soon to be 2. We're announcing that next week. We're going to do our second Emerald's Bistro on a new ship called Celebration, where the first restaurant is on Mardi Gras, go figure. But getting back to the restaurant business, it was a difficult time because here's no revenue coming in, but I kept my staff for the 5 restaurants.
Wow.
So, you know,
that's expensive.
Very expensive, and obviously a big commitment to the communities that we're in. 2 in Las Vegas.
How many people is that?
Well, I went from a little less than 1,800 staff members. Right now, we have just a little under 800. So, but I don't know where they went. That's the other thing. You talk to restaurateurs and chefs. It's like, you know, the labor pool out there. Talk to Danielle, talk to Eric Repair, et cetera. Where do they go? It's like, you know, I talked to my doctor friend. He's having trouble getting a nurse. You know, it's crazy.
We've talked about it with economists and market watchers. It's just like, how is it persistently that so many people have just kind of left the workforce and stayed out of it? And some of it I get of retirees and so on and so forth. But that's not necessarily the case.
Yeah, but you know what? Here's the thing, is that the majority of those people weren't retirees or even close to being retirees. They were, you know, they were young people, 20s, 30s, 40s, right? That, you know, still had a lot in them and a lot more to go. But I just don't, it's so difficult these days. Staffing, supplies, purveyors. I mean, it's still today. I mean, we are working on a renovation project right now, and you know, I have to order stoves like a year in advance, you know, 10 months in advance, because it used to be like you could pick up the phone, okay, 6 months, 6 weeks, you know, boom. Now it's not like that at all. It's all the way around.
So it's still those persistent problems. That
It's difficult operating out there, but you know what you have to do is you got to pull back the reins, and you got to go back and say, okay, and then you got to go to the team and say, all right, how are we going to do this better, and how are we, you know, we've already passed survival, right? So we're already past that stage. Gate 1 is gone. So, you know, how are we going to get there?
I have to say, Ivan the K on Twitter is saying, please tell him my wife and I miss his restaurant in the South Beach.
Yes. We had a great restaurant in South Beach.
We love Ivan the K.
We do, Ivan.
A couple of great restaurants in Orlando as well, but you know, you got to do what you got to do.
He also said, bam.
That's
I'm just going to tell you. All right, we're going to come back with Emeril Lagasse. So delighted to have him here. World-renowned chef, as we said, host of Emeril Cooks on Roku. We're going to get into all the stuff he's doing on Roku.
In the meantime, Denise Pellegrini standing by in our newsroom with a world and national news update. Hey, Denise.
Hey, Tim. Well, the Senate is now a step closer to guaranteeing same-sex and interracial marriage in federal law. You remember Supreme Court Justice Clarence Thomas said the court might overturn both, as it had the right to abortion, and Republican Susan Collins of Maine leading the push to prevent that with the law.
More than 70% of Americans support marriage equality.
And that's Senator Collins there. The House has already passed something similar. Republican Mitch McConnell winning re-election as Senate Minority Leader, withstanding a challenge from a fellow Republican. That's after those heady midterm losses for the GOP. McConnell now turning his attention to the runoff in Georgia for partial redemption.
All of a sudden, I'm a fan of the runoff. We got another chance to get it right. And that's job one for us. 50 is better than 49, and we're going to give it everything we got.
And McConnell, of course, would have been majority leader if the GOP had retaken the Senate. Top defense officials of the 50 nations supporting Ukraine's military meeting to pledge millions of dollars in aid, beefing up defenses against missiles. Bloomberg's Irv Chapman reports from Washington.
Chairman Mark Milley of the U.S. Joint Chiefs of Staff said Ukraine's forces have had success after success, but Russia still has control of some 20% of Ukraine's original territory.
Militarily kicking the Russians physically out of Ukraine is a very difficult task.
General Milley said Russia has resorted to targeting power and water supplies on civilian populations, which is a war crime. In Washington, Irv Chapman, Bloomberg Radio.
Thank you, Irv. And Global News 24 hours a day. And on Bloomberg Quick Take, I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. We are here at Bloomberg Business Week with Emeril Lagasse. You know him well. All right, I'm going to ask, and I said you can tell me if this is a silly question or whatever. Where did boom?
Bam.
That's what I was going to say. It's bam. Why is people telling me boom?
I'll make the story really quick. You ready?
Where did it come from?
Because there's a lot that we do.
Can tell I don't
Back in the
cook.
old days when I was doing Essence of Emerald, we were doing 8 shows a day.
Yeah.
And so you guys know television, it's unheard of to do 8 shows a day. Okay,
That's crazy.
Unheard of, right? So being a food show, we do 3, 4 shows, try to get for lunch. We had what we called a shift table. So all the food that we cooked, we'd put on that table because the staff wanted to eat it. That's
where I would be.
Yeah, that's all,
the food.
right. So we would come back after the lunch break, and all of a sudden it was a very tiny crew. 4 camera, 1 stage person, people in the control room, etc. And all of a sudden, the camera people, they eat all this food. All of a sudden, I'm losing them. And so, bam, came about, waking everybody up to like,
Are you serious?
Yes, can I get your attention, everybody? Because we got 3 more shows to do.
Did it work?
Yeah, it did.
That's pretty amazing.
I'm hoping my producer, Paul Brennan, is not listening because he's going to be like that when we're not paying attention. He's like, bam!
Exactly. Take it away, Paul.
He said starting tomorrow he's going to be doing. You had a question.
I think that's just fantastic. So how do you feel about the way that kitchens are portrayed in media today? You think about a show like The Bear, for example, that got so much attention.
Yeah, I mean, the world has changed, and so has television, right? So, we're in a place right now where people are really thriving on this competition stuff, and I could have been there. I'm a guest judge on a couple of them, Gordon and Top Chef, etc. But I didn't want to be in that arena. That's just not the arena that I want to be. I want to teach people how to cook. I want to take the just the whole intimidation factor out of like what cooking is, or what shopping is, or what wine is, right?
All right, hang on a second, Emeril. Bam.
Bam.
No, come on, bam.
Bam.
Thank you. We're going to come back with Emeril Lagasse.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We have got the Dow, the S&P, and NASDAQ all declining today. Down day on Wall Street as Fed pivot hopes diminish. The S&P was down 33, a drop of 0.8%. The Dow today down 39 points, a decline of 0.1%. NASDAQ down 174 points, a drop there of 1.5%. 10-year yield 3.69%. We've got the 2-year yielding 4.36%. Spot gold down 0.3%, 17.73 the ounce, and West Texas Intermediate crude down 1.9%, 85.29 a barrel on West Texas Intermediate crude. NVIDIA shares after hours up by roughly 2%. It is the most valuable American semiconductor maker. It posted quarterly sales that topped analyst estimates. Also after the closing bell today, we had Cisco Systems, the biggest maker of machines that run computer networks and the internet. It delivered a bullish revenue forecast helped by corporate and government spending on technology. Cisco after hours up now by about 4%. Recapping down day on Wall Street, S&P today fell by 33 points, down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, just want you to know, Charlie, we're getting advice from Emerald about where we should go for dinner, where to maybe make a reservation. Emerald Lagasse is still with us. You know him well, owns restaurants. He's a chef, has been doing it for a long time. He's also a host of Emerald Cooks on Roku. There's a bunch of programming, all of his going on Roku. Where do I want to start? We want to talk about cruise ships. I want to go back there. Because you guys, you've got deals with Carnival and your food, your restaurants, right?
Yeah, it's really my food, and it's a remarkable experience working with the staff. You know, first of all, it's worldwide people, so they're from all over the world.
Yeah.
The kitchen staff predominantly is from India. It's been an absolute pleasure working with them. Of course, I'm a huge fan of the president, Christina, and of course Arnold, who's really a driving force. But it's been a remarkable experience working with them, because it's not just about like, okay, here's a dish that you can do. It's about training manuals, working with the kitchen team, the food and beverage team, and them doing a really awesome job executing. Because what they do really well is execute.
Well, how do you do that when it comes to consistency? You know, in a floating city, as you've described it before, Carol.
Yeah.
But also, in Las Vegas and Florida, how do you do it?
Yeah, so it's not easy, but you know what? I've been to the route where I've had many restaurants, and obviously since the pandemic and by choice, I've really tailored that down to now where it's manageable. Great people, great team. Can't win a Super Bowl without a great team, right? It's not just the quarterback. So you can't, you got to have a great team and great leadership. I just try to remind the staff every day that we're going to get up and we're going to do a little bit better than we did yesterday. And it's a constant movement. It's every day we're just pushing and pushing, whether it's service or whether it's the food, the seasonal menu, et cetera, et cetera. It's a constant push. But once you're in it, and I've been in it since I was 10 years old. So it's very hard. Once it gets in your blood, it's very hard to I thought at times that I wanted to do something else. Well, I'm going to become a wine guy, or I'm going to, whatever. No, it's not going to happen.
Can't fight the DNA.
No. It gets in your blood, and I have 4 kids. My son is the only one interested in the business, and the girls are just kind of, one's a CPA, one's
also valuable when you're running a business.
Yeah, one does makeup, massage. The other one is a senior in high school, soon to go to college. So they're interested, but they're not interested. And many times the girls have told me, Dad, why do I want to do this? It's too much work.
Okay, what do you cook at home when you're with your whole family?
It depends. I'm a very seasonal kind of weather kind of guy. I love seafood. I love fish. So that's usually what kind of comes to the top. But it could be a great roast chicken. It could be bolognese. It could be It could be.
As I sit here and nibble on my
I know.
banana.
after spending.
Well, they have more out there, by the way.
But after spending 12 hours, shooting, cooking, do you actually want to come home and cook?
Or do you order out?
No.
Do you never order
Very,
out?
very rarely. I don't really eat fast food, and I don't really. Very, very occasionally do we order out. Mostly Vietnamese food. New Orleans has such an incredible Vietnamese population and such incredible Vietnamese food. So that's really, I guess that would be called ordering out, I guess, right? Having pho and banh mi's and rolls, spring rolls delivered to your house, maybe? That's ordering out.
Do you love New Orleans?
I do.
I mean, the influence, obviously.
Yeah, well, I moved there in '82 to take over Commander's Palace. I fell in love with the city, the architecture, the music, of course. I have a little slight background in music, so that appealed to me.
Are you going to serenade us?
Yeah, later. And then all of a sudden, I just fell in love. The food is it's one of America's greatest food cities, in my opinion. I think people in New Orleans, even after the pandemic, eat dollar for dollar. They eat better than most places in the world, and certainly in this country. It has, hundreds of years of tradition, so, it's not just about Creole or Cajun. There's a lot of history, there's a lot of tradition there. And now, you add all of the ingredients and techniques from other cultures that are influencing, the city beside, the Cajun and Creole aspect of it. And it's really, really just a remarkable food city. It really is. Whether you go down the street and just have a simple po' boy, or whether you go to a traditional classic place like Antoine's or Commander's Palace or Galatoire's, or whether you go to one of the, the more modern restaurants like Susan Spicer or Emerald's or whatever, it's really a remarkable place. I think New York, and New Orleans is really what's really happening. Food cities, in my eyes at least, that's what's happening. I used to be able to say other cities, but since the pandemic, that I put the brakes on that.
Well, and I do wonder when you look at big issues that are facing the food industry. We've talked a lot about supply chains, right? With Russia, the invasion of Ukraine, and costs, climate change. Innovation, there's some disruption going on, a lot of it. I mean, what do you think about? What's front and center for you from someone who has been so involved in this industry?
It's gotten very, very hard, very difficult to operate. Restaurateurs are having a hard time because costs are through the roof, labor's through the roof, if you can find them. I'm really tired of everybody blaming everything on COVID. It's like, people, let's get over that right now, okay? Forget it, it's gone. It's not going away, okay? I'm sure in a couple of weeks there's gonna be another variant that's gonna happen or whatever. It's not going away, so face the world. But quit making excuses about, why is it taking me a year to get a stove instead of like 6 weeks or 8 weeks like before?
Right.
And the first thing you want to do is blame everything on COVID. I'm just really tired of that. It's like enough's enough. I mean, let's get over it. If we haven't figured out at this point in the world how to live with it, we're in trouble. Maybe you should go bury yourself under a tree. I mean, really and truly, it's just, come on, let's just move on.
It does make you wonder, like, why we haven't figured it out. All right, I've got 30 seconds left here.
Oh, no.
We'll come back.
I'm staying for another segment.
I told you, you're going to come back with your son, and we're going to have a bottle of wine, and we're going to do this.
You got it.
Last thought you want to leave with our audience?
Really and truly, and I'm not one to you need to really check out Emerald Cooks on Roku channel. It's an awesome show. It's very personal because the guests that I have on Emerald Cooks, it's the shrimp person, it's the oyster person, it's the two ladies that are making sake.
Around New Orleans, right?
Exactly. And it's really, and a lot of these people, especially the Tailgate Show, never been to New Orleans. And so that's what makes it even more special.
Very special for us on this Wednesday. Emerald, be well. Thank you so much.
Thanks so much for having me.
Emerald Lagasse, this is Bloomberg.